I wonder what the OPEC and OPEC Plus are thinking right now about the way forward, because, you know, the view is that energy prices would stay, for crude especially, 100 and beyond.
Well, I think our view, our base case for 2023 is $90 for Brent. But you have to look at two other cases. One is, you know, a real recession, and then we see oil prices getting down to around 70. On the other hand, if you go back to your China story, China comes roaring back, underinvestment in oil and gas, and we get up to like $121. So, but I would say 90 is the base case, and I think OPEC Plus around $80 a barrel is when they start to get really concerned and might make another cutback. But I don't think we're there yet, and it's complicated because of one member of OPEC Plus is Russia.
And Dan, just very quickly, when you look at the complications here and the pressure on some of these oil companies and the energy transition, one story that really stuck out to me this week was oil investors calling on the big companies now to take more aggressive steps to lower their greenhouse emissions, particularly off the back of those record profits. How do you see this playing out? Is it easier said than done?
Easier said than done, and that's some investors. On the other hand, we presented a report on U.S. oil to the Secretary of Energy last week, and she called on oil companies to increase production. So I think a lot of other investors are actually looking at the sector, and what they're really interested in is returns. So some investors are putting the pressure there, but others are very keen, particularly when they don't have very many other places to look for returns, looking for it from the oil and gas sector.